Hello, ladies and gentlemen. This is Itai Levitin at Investing Live. And on this simple video, I'll show you how I'm adding one of the most popular indicators, EMA20. So I clicked on indicators at the top of TradingView. I'm going to put EMA20. And I've got various here, but I can also just look at exponential. I'll show you the moving average exponential, which is here. And you want to make sure that what the settings are. By default, it should have links 20. If not, please have it on 20. And the source should be the close. You can change the color if you want. I'm just going to keep it as is. And then you will see it differently on the different time frames depending on what time frame you're looking at. If I look at the daily, which is probably the most popular time frame that people look at, I want to make sure that I'm on log. So here I'm going to put it on logarithmic. Okay, that's very important because if price moved a lot on the y-axis, then you don't want it distorted, and the log or logarithmic view is the ones that is mostly being watched. I see with the EMA20, I see the trend. Okay, if this line is slanting downwards and price is below it, it means that on this time frame that I'm looking at, the trend is clearly still down. Does it mean that it's not going to reverse now? No, it does not, but it means that the trend so far has been down. It gives me a broad, quick view of what's happening with this market on this daily time frame. But if, for example, I go on the 5-minute one, then here it's slanting upwards and price is above the line. And it is possible that if I decline it, if the price declines, I have some support. And if I'm a day trader or scalper where the 5-minute time frame is relevant for me, I may even want to buy that for a long, having some stop. Just for an example, having something like this, short stop below that line, and reaching, let's say I want to reach this level. Again, this is not for showing the detailed trading, just as an illustration. And that would be a spectacular 4.17x to 1 on that trade. But I'm not now in trading and not in scalping. I'm in the business here of this video of showing you how to use the 20 EMA on, and you really want to see how price reacted, if it reacted in the past to it. There's never going to be any perfect touch points necessarily. But in this case, I'm seeing on the monthly level that for quite a long time, price has been trending up and not even touching it. And now after, for example, let's see, since the last touch, it's going to be 33 monthly bars from 2nd of October 2023 until perhaps the next month or this month. We're going to have, for a long time that we haven't had a touch, we might have a touch, and that actually increases the chances that this will be a support on the monthly level. So if you want to see exactly where that EMA20 on the monthly level is, we can have labels, we can put the name and the value, and I see it on 3,857. But if I'm now a swing trader, I can actually be casting a net at this range from about 3,903 to 3,796. So that's about 100 and what, 7 points. And it doesn't mean that that's still quite a wide range if I'm looking at a certain size of the position. But if I'm doing micro in futures, or if I'm now, let's say I'm in IC markets and doing CFD trading, I really want to, I can plan my position size that way. That will still allow me to have a certain stop, even below the bottom of the range, and still sustain it if I lose. You first have to look at if you lose, if you get stopped out. That's the first scenario you should be looking at. But otherwise, I can have a big upside because I can get to a new all-time high from here. Or even if I get to around the 5,200 round number, that's an immaculate reward versus risk. Just to show you a little bit, let's say I do it right in the middle and go to about 5,200 or so. I can still have a stop here, and that's a 7, more than 7x to 1 trade. Okay. Again, this is an illustration. It's not a trade plan. Some will want to see that price actually goes below that EMA line and then back up. Some would look at, they would mark this area that I marked, and then they would look at lower time frames, for example, here on the 4 hourly, and then they would wait for price to, let me get that thing, thank you. Let's say they would wait for the line to cross back up with the price being above an uptrending EMA on the 4 hourly time frame. That would and put them with in line also with the aforementioned monthly EMA, as I mentioned, and would give them more confidence, and they can perhaps enter on a reclaim of the 4,000 round number, and then just hang on for maybe a few months on gold. Okay, so that's just an example. But back to the basics, EMA is a good way for you to understand what is the trend, and it's one of the most popular indicators out there, something that you should consider. And remember to look at the price action to the indicator, and not only to the indicator itself. Thank you, and see you on the next one.